Hey, everybody. Hope you're doing well. My name's Jeff Gibby. I'm going to read a legal disclaimer and kind of kick things off today. I hope you're doing well. I can't believe we're almost out of November, but I hope if you're here in the U.S., you're watching us from the U.S., I hope you had a good Thanksgiving week last week. And even if you're out of the U.S., I hope last week was good for you. But in any case, thanks for coming. If you're watching us on YouTube, make sure to like and subscribe. It helps a great deal. We're always putting together great videos. Most of them are at least pretty good, but some of them are great. If you subscribe, you'll get notified. Thank you for coming, everybody. Also, say hello. It's good to see you, John and Maverick. If you have comments as we go, Serge will be watching the questions both in GoToWebinar and YouTube. So we got you covered there. So without further ado, let's read a legal disclaimer. Today's demonstration is designed to instruct you on using Metastock and the accounting software plugins. It is not a recommendation to buy or sell, but it's rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. And a new part, just for you today, Metastock does not endorse the purchase of any security. It is not paid for the promotion of any security. No information contained in this presentation should be construed as investment advice or a solicitation to buy any security.
Hey, Jeff.
So, I hope you, yes.
I want you to read that again with your eyes closed, that last part.
No, actually, that was the first time. I've done the other one 3,000 times, but did you enjoy the new ad?
I did enjoy the new part. I would also like to mention you're smacking your desk with renewed vigor and vim, but it is a little distracting.
Okay, I'll try and
smack the desk.
Do that as
well. But
much.
I also really did enjoy the new intro. It was fabulous.
All right, cool. I'm glad you enjoyed it. Yeah. I don't know how much we paid for that new intro, but in any case, thank you, Greg. Our presenter today is Serge. Serge is going to talk a little bit about, or he's going to talk for about an hour. He's going to talk about how to find stocks that are extremely overbought, oversold, and he's going to show a really good strategy around that, one that I quite like. And so he's going to talk a lot about that. I'm going to get out of the way, but let's get him on here first. Serge, how are you doing today?
Hey, Jeffrey. How you doing?
Good. How are you?
I'm good.
I can see you. I'm going to go ahead and turn this over to you.
That's helpful.
Okay.
Perfect. All right, I'm going to quickly get my screen sharing up here. Go. Make sure I can see the questions. All right. I have to say, I do like it when you show a bit of energy and smack the desk.
I know. The hater's going to hate.
Serge, I cannot describe to you how disappointed I am that you said that.
We might be able to agree on the shirt, though. That's the one thing that I mentioned in an earlier conversation.
I'm out. All right, we can see you, we can hear you, and I'm going to get out of the way. I'm not sure about this other guy, but the floor is yours.
I appreciate it, guys. Thanks so much. And I am going to turn the camera off here in a bit just because it distracts me too much. And I do want to make sure I can show you everything that needs to be shown here. And I promise you I will be speaking directly into the microphone, so that it's not constantly going in and out, in case you're concerned about that. Let me just double check. Okay, and you guys can see the screen as well. All right. Perfect. Well, happy Wednesday, everybody. We're looking at the markets here today. We had a bit of a reversal. Nothing new. The markets have been pushing higher as yields have gone down in the fixed income markets. And largely speaking, that's been the driver of equities here for the past month or so. So if you are wondering if equities will ever go down again, just watch yields. I think if yields get a bit of a bounce, the equity market should probably find it a bit more difficult to go up in that scenario. So maybe just a bit careful. And this is certainly not a recommendation. Nothing is a recommendation, by the way. Just keep in mind that at least from our perspective, the year-end rally is probably most of it's already in the books. I've had a big move in November, and December tends to be a lot more difficult. Of course, we're heading into November here in just a couple of days. So I'm going to quickly turn the camera off just to make sure that I don't get distracted here. And there goes the camera. I'll bring it back up again later. There you go. All right, perfect. Cool. All right. Okay, so what I'd like to talk a little bit about today is a way of looking at the market that I think has become a bit of a lost thing because we've had a very strong bull market for the past 12 years. And I think a lot of people have become very directionally exposed. I also want to quickly bring up my own disclaimer. I think it's really important to understand that trading and investing carries plenty of risk. Nothing here is deemed a recommendation. It's just, basically research and education. And so please make sure you take this serious and never trade or invest with more money than one can afford to lose. So just quickly going back to the comment I said before, as you can see, November tends to be historically a very strong month. We once again saw that this November that we're just about to come out of and go into December. December is much trickier and can actually have downside surprises that a lot of people tend to forget. And so with risk management and downside surprises in mind, let me quickly just talk about John. John is and actually based on a real person. I am making this fictitious or change his name, making it an avatar here for purposes of compliance. But John came to me about a year and a quarter ago, and he had made good money over the course of the past 12 years. But what we found out is that he largely was making money in the markets because the market went higher. And I don't know about you guys, but maybe some of you have noticed that when the market goes up, when the S&P 500 goes up, you tend to see profits in your portfolio and having an easier time to trade even. And when the S&P 500 goes down, it tends to be much more difficult from a risk asset perspective, of course, as well. So what I'd like to show you here today is what happened to John last year. And if you look at the top pane here on this chart, you can see that green line. A green line represents John's P&L, his profit and loss. And you can see he, between January and June of last year, made almost $1 million. And then he ended up losing that $1 million of profits in about a matter of a few weeks. So 6 months to the upside, it took 3 weeks to erase all that. The reason for that is because he got very greedy and he was using strategies that I think are over the long term going to have exactly these kinds of results, meaning they're going to basically evaporate accounts. What I have been able to show John in the meantime is something that is much more sustainable in our view. And I'd like to show you as well what that looks like. I do want to quickly mention that from our perspective, the next number of years are going to remain probably range bound in equities and returns in equities. We expect low to mid single digit returns over the coming years still. I don't think we're out of that. The S&P is sideways for the past 2 years. And just in case you're wondering, we can have prolonged, secular bear markets. Secular bear markets are what you're looking at your screen at, sandwiched between those two orange lines. Within that, we can have cyclical bull and bear markets, but all within the context of a long-term sideways market. And I think we're probably back into one of those. The question that we have to ask ourselves is, what happens when we are in such an environment? What happens to our portfolio? Can we still make money? And lots of people are very directionally exposed in the market, as I said before, and have probably forgotten or maybe just have never looked at a market that just goes sideways for a long period of time and what that means for their lifestyle, for their retirement maybe even. So we're expecting lower returns going forward in the equity market. Again, the S&P has already gone sideways for a couple of years. And so what I think is worth considering, and that's what I'm going to show you, is what really is a very simple adjustment. It's not about reinventing ourselves as an investor or a trader, but it's really just making a small change to what we are already doing. And so if you look at the S&P 500 sort of distribution month over month throughout the year, it's rather uneven, meaning there are good months, there are bad months, and there are, just boring months. How many people in here, by show of hands, are looking to generate an income, steadier profits from your portfolio, meaning, a monthly positive return, a quarterly positive return? Give us a yes in the chat box if that's something that fits into your sort of want and need. And the reason I'm bringing that up is because that is indeed something that we see lots of people wanting to achieve. The trouble that we see is lots of people that want to achieve that tend to use strategies that are extremely ill fit to accomplish that goal. Because what we are seeing is that lots of people are actually using strategies that are extremely risky to achieve that goal, mostly directional strategies. And by doing so, they tend to essentially risk and go against what they're in fact trying to achieve. They're trying to achieve something steadier, but instead they're using very volatile strategies. So if that is something you're trying to do, achieve steadier profits, type a yes into the chat box. And so what I'd like to show you is what we do, which not only has worked very well for us, but also for lots of people that are doing this. The details do matter. So I'm going to walk you through all the details. So really what we tend to see is lots of people have these sideways portfolios to maybe even losing portfolios that look a little bit like this mountain range where, they're making money for a bunch of trades and then they have one or two trades that lose and gets them right back to the beginning of where they started when they started doing that series of trades. So one or two losers and they start right back from the beginning, which is very frustrating, of course. And so this is where the importance of what I consider to be portfolio income is really important. So losing accounts or frustrating, stagnating sideways accounts leads to a loss of confidence in the trader or investor at work. It leads to ultimately breaking rules as a result of that, and ultimately it's just gambling. And then that's really when the blowups happen in the portfolio. So we want to avoid that. And again, remember John, that's exactly what happened to him. He was using a strategy that was actually very risky. It worked for a long period of time when things were linear and stocks went up every year. But ultimately, the strategy blew up in his face after a long period of time. So that's what we want to avoid. Again, this John, in case you're just joining, I introduced him before. He's based on a real person. He came to me and he had made almost $1 million last year, and then he lost it all in 3 weeks because he was using a strategy that's just very risky inherently, and he was not aware of that. And I think a lot of people are unfortunately in that boat. So I'd like to show you what we do instead. What I'd like to show you here, and this is not about making this seem some sort of like unicorn dust or something, the holy grail. I don't think that exists. I think it's just about having a repeatable strategy. But it's not something that requires a lot of time, I should say. I want to let you know. And we do tend to see a very high profitability rate as well on this. The most important thing to me is that it's repeatable. Point number 3 is a very repeatable strategy. And that's really what I like most about it. At the very core of the strategy, and we're going to start looking at this here in MetaStock, is really the phenomena of steep slopes that go vertical. And you can see here we have a stock that went from steep to vertical, and at some point it gets so overbought, extreme overbought, that it simply just can't continue going higher at that rate, and it starts to stagnate. That can also happen on the downside. You can see a steep drop to the downside, followed by a vertical collapse. And at some point, things get so oversold that it simply is not sustainable anymore on the downside, and it'll either bounce or at least consolidate. So that is important. How many people here have ever traded an option before? Anyone ever traded an option before? Yeah. So, and it doesn't matter at all if you have or not, because what I'd like to show you is, and I'm going to skip through this here because I just want to get right to the meats, but what we're going to look at here together is 4 simple steps that are very repeatable. We're going to look for these steep moves that I just talked about, and then we're going to make sure that we check for the right options to do a specific, what's called a far out of the money call or put spread. And we do this in a very, very specific way. So the details here matter. So please do pay attention on this, because we're going to go and give you the exact playbook right now. And then we are looking and do repeat this on a monthly basis to generate a positive income over time. Again, we're looking for steep slopes that have gone vertical. And over time, what happens is when the steep moves goes vertical, that is typically when we start to see a consolidation phase. A consolidation phase can mean either sideways or lower, or even a little bit higher. It's the rate of change that we're looking for to slow down. And again, this is what these examples look like. We'll look at it here on the actual charts in just a few minutes. But essentially, when you have an asset that goes vertical from a steep slope, it tends to consolidate or stall in price. And that stalling in price is really where our strategy shines. So here's an example on a stock called Meta, formerly known as Facebook. And I'm going to just walk you through this example. And you can see here, this is a historical example, so I can get you to look at the concept. This is a historical chart of Meta that shows the stock having gone in a pretty steep move to the upside, and then have these vertical leaps every once in a while. And you can see that after the steep move leads to the vertical moves, each and every time the stock ultimately mean reverts. Now, the mean reversion is not even what we're counting on. We're simply saying after that steep vertical rally out of the already steep move, the stock will tend to consolidate. That's the only thing we're doing here. And so what I'd like to show you is an example. This is the same exact chart, by the way, that I showed you on the previous slide. So this is the same exact thing as this. I'm just here able to show this a bit better. We had the situation where Meta once again rallied to the upper end of its trend. And then what happened is the stock basically ran into resistance. Now, what a lot of people will tend to do at that point is they'll either take some profits, which makes sense if they're long the stock. But a lot of self-directed traders or investors will actually then buy a put or even short the stock. The trouble with that is that if I buy a put or I short the stock, I can only make money in one direction. The stock has to go down. But at any given point, including here, a stock, an ETF, a commodity, a currency, a futures contract, whatever, can either go up, it can go down, or it can go sideways. So we find that making a bet that something going in one direction is a low probability bet. It's got a 1/3 chance of making money, all else being equal. Now, if we're in the business of making speculative bets, then of course, making a directional trade makes sense because we expect a lower probability of outcome. However, if we're in the business of trying to generate a more steady stream of positive returns, maybe that's on a monthly basis, on a quarterly basis. Maybe we are retired and looking for another source of income. Maybe we are working part-time, full-time, looking for more income. Whatever that is, whatever the situation is, if that's our goal, we need something that's a higher probability of making money. So in this case, what we like to do is we like to find opportune moments where a stock, an ETF, a commodity, whatever, is extremely overbought or oversold. In this case, we're looking at overbought. And then we're simply making a bet that it's not going to go a heck of a lot higher, meaning we would make money whether it goes down, whether it goes sideways, or even if it goes against us to a pretty good degree. And so let me show you what that looked like. So at the time we put this trade on, it was February at the time, and we were using April options. So right off the bat, this is particularly for people that are using options, probably something that will be a bit foreign to maybe many of you. where we are using options, April options in February. Why would you do that? I'll get to that in a second. But what we're doing is we are selling an option all the way up here and buying another option, a protective option against it a bit higher. And so we're taking in a credit. And the reason we would do that is because, again, that way we stand to make money, whether the stock just goes sideways, whether it goes down, or even if it goes against us to a pretty decent degree. But what's really important here is that we are not using short-dated options, because if we use short-dated options and the trade goes against us, we will tend to lose money pretty quickly. And a lot of individual investors at home are using short-dated options. To me, the definition of a short-dated option is anything inside of 30 to 40 days. But if we don't have to worry about using immediate gratification options, we have a lot higher probability of making money. So let me circle back to the example here. So in this case, we sold an options spread, as it's called. We sold an option here at the 125 strike. We bought an option at 130, and we actually received money up front, $100 per contract or $1,000 with 10 options contracts. Well, in this case, you can see that the stock actually did go down. And I'll show you examples in a minute where the stock didn't go down and we made just as much money. But just in this example, to keep it simple, the stock went down and we were able to actually buy back this spread, as it's called, for just $24, meaning we were able to make an income of 76 cents, which translates into $76 per options contract, or $760 of profits with 10 options contracts. And so you can see, if we're able to use an option that expires a couple months in the future, but we only hold the trade for 2 weeks, we put ourselves into a very different, and I would argue, and empirically will tell you, in a much better position than if we were to use very short-dated options. Okay, so that's extremely important for us to keep in mind. Are you guys following this so far? Right, so this is just the concept of what we're trying to do. Now, of course, the question is how to search. This is nice, but how do you find these points in time? Well, I'll show you that here in just a minute. Here's another example, and this is, I think, an example that's probably quite prominent. I think people remember this time. This was actually during the first lockdown of COVID in 2020. And what happened at the time is we saw the S&P 500 sell off or drop about 30% in 3 weeks. And I remember walking to the office that morning and discussing the trade with one of my staff members. And we both agreed that no, we don't want to buy the S&P 500 there. But we would be willing to make the bet that after a 30% drop in 3 weeks, that the S&P 500 would not drop an additional 18% over the coming 2 weeks. And so what we did is we just sold them in way out of the money put spread in March using June options. Think about that, guys. When was the last time you did a trade using options expiring like 4 months in the future, right? Maybe never. And so we simply sold a put way below the market. We bought another one against it a bit lower, and we were able to receive an income of $1.05, meaning $105 per contract, or $1,050 if I would have done this with, let's say, 10 options contracts. And so what ended up happening is the S&P 500 just literally went sideways. From March 16th to March 24th, if you look at this closely, you can see the S&P 500 just literally it went nowhere. It just went sideways. But we were able to make a profit of 11.4%. Well, Serge, how is this possible? How would you be able to make money if the S&P just went sideways? It's because of exactly the way we structured the trade. Meaning in this trade, we don't make a bet that the stock has to go higher. We're simply saying it's not going to go a lot lower, which means we can make money whether the stock, or in this case, the ETF, goes sideways, whether it goes higher, or it even goes down to the upper bound of these two ranges. So this is an extremely important part of what we do because it's all about probability. And so one of the things that I like to show people is that these options credit spreads, the way we do them, have proven to be much higher probability than doing directional trades. What's important, of course, though, is we're able to find and spot some of the times when these stocks become extremely overbought or oversold. And so what I did here using MetaStock is I actually ran a scan this morning, and I'll show you what the scan revealed in just a little bit. But I ran a scan on equities and optionable stocks and some ETFs. And I'll show you again what this came back with in a minute. But just for argument's sake, and actually not argument's sake, for illustration's sake, I wanted to show you what we developed while I was working at JP Morgan as a side project off out of the office with a couple of my managing directors at the time. We were trying to find out what constitutes extreme overbought and oversold in the market. And I'm talking about extreme, not a little bit. And so what we developed is a methodology that tells us when something is just that, extremely, like exhaustively overbought and oversold. You can see here, for example, on Airbnb, we got this down arrow. That means that the stock is likely either going to go down or just consolidate for the next 2 to 3 weeks. And you can see the stock wound up going from like 145 down to about 110. That's a big move. Here in Nordstrom, you can see we got an overbought signal. The stock ended up going from 27 to like 15. And again, the indicator is not telling us the stock has to go down. It's just telling us it's extremely overbought. Or here you can see in Southern Company, we got an oversold signal. The stock was extremely oversold. And you can see that the stock ended up bouncing. So we would just have sold a put option way below the market, bought another put option against it, taken that credit, and just let the stock generate that income for us over the next 1 to 2 weeks. Here's Dick's Sporting Goods, DKS. You can see the stock got overbought, arrows. The stock then stopped going higher for the next 1 to 2 weeks, right? In fact, the stock actually went from 150 down to 135. We don't even need that to happen, right? All we would do then is sell a call up there, buy another call against it a bit higher, keep the trade on for 1 to 2 weeks, and move on. That's the kind of stuff that we're doing with this. Here's another example. This is gold, the GLD ETF, which we've been doing a lot of bull put spreads on gold recently on every dip. But you can see when it gets extremely overbought, we get a sell signal or a down arrow. When it gets extremely oversold, we get up arrows. So we would do bull put spreads down here or bear call spreads when the stock gets very overbought. Here's Foot Locker a little while ago, extremely oversold. And you can see the stock end up going from 17 to 23 or something like that. So all we would do is sell a put down here and buy a protective put against it a bit lower. Here is another stock. You can see extremely overbought. It goes from 60 down to 50. That's a nice 15% move. I want to just go into the current market as it is right now. I'm going to bring over my MetaStock platform and show you this a little bit more as well. So you can see this happening right now. And we'll look at some intraday stuff in just a few minutes. But this is Coca-Cola. You can see just a few weeks ago got us an oversold signal. And if you guys have tickers you want to look at, I'd be happy to entertain those as well, by the way. Let me quickly make sure I can see the YouTube channel as well. Up here. You can see that again. Yeah, and welcome to all of you on YouTube, by the way, as well. I know there's people joining from all sorts of different avenues, which is awesome. But you can see Coca-Cola. We got an oversold signal, and then the stock ended up rallying from the low 50s to the high 50s. That's a nice 10% move. I'm just going to bring up some other popular stocks here in real time. ADP. Let me bring this up quickly. So you can see this stock got oversold, and then it ended up moving from 215 up to 230, right? That's $15. So all we would do is sell a put down here, buy a protective put against it a bit lower, and keep the trade on for 1 to 2 weeks and move on. We can look at something like DT Energy. This is an energy stock. You can see the stock had oversold and then ended up bouncing quite significantly to the upside, right? So this is the kind of stuff that the indicator is built for, to find extreme overbought and extreme oversold situations in the market. On semiconductor, for example, here's a stock that you can see got oversold around $62, moved up to now currently trading at 72, right? The green arrows. All we would do is sell a put below the market. So let me make some annotations. So we're way below the market. We sell a put. We buy another put a bit below that. We take in the credit, keep the trade on for 1 to 2 weeks, and hopefully move on with a profit, right? So it's a very repeatable strategy that we like to use both on the daily charts, but can also be used on the intraday charts, which I will show you here in just a couple of minutes. Let me just quickly pull up the YouTube channel here on the other side. Give me just 1 second again. It keeps hiding back in my arsenal of windows here. Just quickly, there you go. All righty. 1 second. Let me check the other charts here as well. Make sure I got everyone. NVIDIA has not had a signal here for a while, just so you know. In fact, let me quickly bring it up. Let me just quickly go back to NVIDIA. Where is it? Here. I think NVIDIA had a signal. I need to pull up the right instrument here. Sorry, 1 second. NVIDIA had, I'll show it to you as soon as I can find it. Yeah, okay, there you go. Yep, I don't see one here recently. Ulta, okay, let me bring the chart over 1 second. There you go. Ulta Beauty right here. This is a stock that got oversold right there, then ended up moving from 400 to 480 or 490. And we'd sell a put below and buy against another one below. And Nelson's asking, what about the delta? Nelson, it's actually not a delta calculation. What we take into account when we calculate the indicator is it goes quite a bit more complex behind the scenes. Delta is too simple a calculation to sell a put spread. I can show you a bit later how we calculate the strikes that we actually sell and the options we find. Roku, bring that up. Roku, I actually showed this one earlier today to a group of people. That's why I have these arrows there. You can see the stock ended up getting overbought, and then we would sell a call up above the market, buy one against it a bit higher, keep the trade on for 1 to 2 weeks and move on. In this case, you can see Roku went from 97 down to like 56. Right, and we only keep the trade on for a couple of weeks. That's a really important part that I want to make sure everyone understands. These are not trades we keep on for a long time. Baidu, let's have a look. One thing I'll tell you, what's really important is that we don't use stocks that are too volatile, because then we're again dabbling in very risky strategies that are defeating the purpose of generating a steadier positive return. So this is for Gigabytes 8. Look at Baidu. We got buy signals, meaning oversold signals. Baidu, Gigabytes, do you think if we sold a put below the market there and it bought one against it, did that bull put spread, do you think over the ensuing 2 weeks it would have made money? You bet it would have. Right? Implied volatility was high. You would have made nice money. And in the meantime, the stock ended up going from 100 and something to 127, right? It's really, really important to understand the concept here of what we're doing. I do want to quickly touch on intraday as well, but let me show you just a couple more stocks. Caterpillar, for example. Let's see here. I thought this is a stock that people always like to hear about. Here's Caterpillar. let's see. I think we had a signal a while ago. I can't remember. Yeah, we had a signal, an overbought signal in this case on Caterpillar. And you can see that the stock got overbought and then ended up actually dropping from 290 to 220. But again, all we would do is sell a call up here, about so. Then we would buy a protective call against it a bit higher using options expiring 55 to 85 days out. And then we keep the trade on for 1 to 2 weeks and move on. That's what we do. Yeah, Ron's asking a good question about where do you close out the trade? We have very specific parameters on that, and I can talk about that in a bit as well. We do never, ever, 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 ever hold a trade through an earnings report. Gigabytes 8 is asking ever, because if you hold a trade, and I'm talking about trade, not an investment, right? If you hold a trade through an earnings report, you're basically gambling. It's our view. That's different from an investment, right? Investing have different time frames, okay? So that's really important to understand. Now, I will also tell you, I like to do this as much as possible on ETFs, because ETFs dampen our exposure to idiosyncratic risks, right? That's an important thing to understand. As I showed you before, we actually ran the scan earlier, and I want to quickly show you that this morning we received an overbought signal in a stock called, the ticker symbol is PDD. So let me quickly bring this one up, bring it over here, PDD. I'm going to bring it up on a live chart. And you can see the last time PDD got an overbought signal was in September. And you can see the stock then went sideways for 2 weeks. That's all it did, right? So we would have sold a call up here, bought another call a bit higher, kept it on for 1 to 2 weeks and move on. I think the same thing's about to happen here. I think the stock's about to consolidate. Doesn't that mean it has to drop? Although it probably will drop to some extent. But the point is more that it's going to consolidate. So I would sell a call up here, buy another call against it, and with the specific parameters that we do. We tend to do $5 wide spreads, typically is what we do, just so you know. I do want to quickly talk about intraday as well. Intraday, I like to use this indicator for on the 5-minute charts. So this is, for example, this is ExxonMobil over the past few days. These are 5-minute charts on ExxonMobil, and you can see that every time it gets oversold, it bounces, and every time the stock gets overbought, it goes back down. Now, I will admit, and it's not an admission, it's just a fact, intraday, I do not do credit spreads. Options credits. Intraday, I do directional trades. So in the case of, let's say, this oversold signal in ExxonMobil, if I was to take that one, I would not be doing a credit spread. I would have just bought the stock or bought an at-the-money call option, right? And keep it on for an hour or so. That's typically what I do. Or if it gets overbought, I would buy an at-the-money put or put spread or short the stock and keep it on for an hour, 30 to 60 minutes. So intraday is a different game. It's directional. So for those people that like to do intraday stuff, this is really a cool indicator to use as well. Like you get signals all the time. You get them in commodities as well. I took one earlier in, for example, gold. This is gold futures. You can see overnight we had an oversold signal, and then gold started rallying about 50 basis points. So we can use this in all sorts of different time frames. I like to focus primarily on the daily time frame, where I use the options credit spreads, and then the intraday time frames where where I do directional trades as well. A couple things that are on the radar right now, a couple stocks that are very overbought. I want to quickly show you on the radar as well that recently have been printing in signals. One of them is Intel. I'll quickly show you this one. Let me quickly bring up the ticker. Here you go. What you'll see here is that Intel is, again, very overbought, and it's likely going to start consolidating here over the next couple of weeks or so. So what we would do is sell a call up here, buy a call against it a bit higher, keep it on 1 or 2 weeks, and move on. Again, really important to us is that we don't hold trades through earnings. If they're individual stocks, if it's an ETF, of course, that's less of a concern. Just so you know, for example, for Intel, I was just checking. Intel does not have its next earnings report until January. So this is one that would be favorable to this kind of a behavior where we don't have to worry about an upcoming earnings report around the corner. So that's important to know. So here's some other signals you can see. For example, PayPal got overbought intraday, and then it dropped for 30, 60 minutes. Or here's another one. The stock got extremely oversold, and then it bounced, and so on and so forth. So you can kind of see how this works in all sorts of different time frames. What I'd like to mention here, and I'm going to quickly check if there's other questions. Yeah. What I wanted to show you here is, first of all, let me show of hands. Can you guys see how this makes sense? Does it resonate with you to find extremely overbought and oversold signals and using them to either do these options credit spreads for a higher probability or intraday? All right, does that make sense to you? Can you get your head around this? This is Foot Locker here. You can see on a daily chart, oversold and starts bouncing, right? So when the stock goes against us because we're not using short dated options, we simply get out. It's as simple as that. Remember, we're not holding these trades for long. We only hold these trades on average for about 2 weeks, right? Because we use options expiring 55 to 85 days out and only hold the trades for 2 weeks. When it goes against us, we just get out. It's as simple as that. The problem is when people use short dated options. When people use short-dated options, they get their asses handed to them. Excuse my language, but I have to be a bit clear about this. And we don't want that to happen to anyone. So that's really what this is all based on. And I think particularly for people that have experienced what drawdowns in the markets can look like, when you're wrong, particularly using short-dated options, you can kind of imagine how this makes a lot of sense. Right. Here's some other ones. This is a little while ago. I found that I was scanning for the indicator signals on Meta stock. So I'm hoping this is helpful, folks. And I see a whole bunch of people saying this makes sense to them, which of course is great. But I did want to show you how you could get access to the indicator, which of course is available on Meta stock. And what you can do is you can look at what's called the Options Income Secrets product. The Options Income Secrets product is designed for exactly this strategy. It's all based around the Vertical X Pro indicator, which is the name of that indicator that I just showed you, that I developed along with a couple of managing directors while I was working at JP Morgan as an investment banker. We were doing this as a side project. And you can see here there's a process involved. And the process is all about the goal is to generate steadier profits, steadier returns, less volatility, and repeatability. So I'd like to introduce you to the Options Income Secrets package. What you're going to get with this is a strategy that is repeatable and really focusing on steadier returns. The benefit is that it gives us a repeatable process, so that we know that on a monthly or quarterly basis, we have a much higher probability of making money. That's what we use it for. That's what it's designed for. And that's exactly what this is all about. The benefit is that we start trading with more confidence using a process like this, with more repeatability. And it gets a little bit easier every day, right? Until it becomes essentially second nature. Once it becomes second nature, this is such a fun thing to do. And I'm going to give you a cheat sheet as well, so you're not alone. We all know that trading and investing is all about having a process. I can't emphasize that enough. So when you follow a cheat sheet, it's exactly there for that. But I also want to give you an edge, and that's why we designed the indicators specifically. So this is not just about education, it's also about having a repeatable process. So we're going to give you access, full lifetime unrestricted access to the Vertical X Pro indicator as well. So it's forever access to the indicator as well. Now, to me, what makes the indicator so great is that it's really all about, as I said, repeatability. And it finds not just a little bit of probability, but really the highest probability setups that we could possibly find, specifically designed for the intent of having steadier returns in the market. And we can use this indicator on multiple different platforms. Of course, Metastock, we can also install it on some broker platforms like Thinkorswim and things like that. If you want to day trade with it, for example, it can be used on different platforms there as well. I know Jeffrey, I think he's going to show us a bit later how to maybe scan for this a bit more, but I want to just quickly get through this so we can talk about that a bit more specifically. Again, I showed you this here Metastock today. It's beautifully simple and straightforward how to scan for this thing. For the indicator, I just literally click on the power console, and when I have the Vertical X Pro loaded, I just scan for it. I hit the start exploration button, and it gives me the latest overbought and oversold signals right there in literally just 1 or 2 clicks of the mouse. To me, the Vertical X Pro indicator, what the best thing about it is that it gives us access to what I consider to be the highest probability, not only options credit spreads for income, but also really day trades in my view. I use this a lot on futures myself. We use it for clients. I have an investment advisory firm as well, where we use that for some of their portfolios for people that qualify as well. So I'm going to give you access to a platform and a foundation that whether you're new to trading or you've been trading for a while now, that you have access to a strategy. You have this tool that you can rely on a month-over-month basis, quarter-over-quarter, with the goal of generating a more steady stream of regular income with less volatility. That's literally what this is designed for, very specifically. Everything that's included here comes included with what I'm showing you here. That's lifetime access to the indicator, to the strategy courses. We actually do member webinars twice a month, a chat room. I'll talk about all that here in just a second. But I did quickly show you what some people are saying. You can see Dave, for example, who told us that if you follow the rules, you can make steady, good income. Those are his words. And you can see what lots of other people, I could be here for half an hour and talk to you about what people are saying and give us testimonials, but I'd rather just show you the proof in the pudding here in real time. I will quickly say, though, I think if someone's in the market that just kind of not taking it serious, if they're looking to kind of put on low probability trades and swing for the fences, this is probably not for them. So I want to just mention that. But for those people that are serious about their money, they want to continue to grow their accounts, whether they're retired or looking to retire or working part-time, full-time, if they're 30, 40, 50, 60, 70, doesn't matter how old or how young, then I think this is a great tool. That is what it's specifically designed for when we designed this while we were working at JP Morgan. The most important thing for us that this is, again, it's about generating income on a more steadier basis in the markets. So the way you can get access to this is the following. First of all, what's included? What's included here is a trading course, number one. That's $976, lifetime access. And you get access to the twice monthly live member webinars, where I give you live actionable trades every single time. They have an 80% success rate, the trades that I just give you in the webinars. That's $997. The indicator for ever access, lifetime access, is $1997, so almost $2,000. We have an Iron Condors course as well. And the total package value here is $3,970. We're going to make this available here for the first 50 people here for Metastock for a whopping 90% off for only $397. And that is lifetime access. You'll never pay a penny for this. It's $397. Metastock.com/steady trader A, or the steady tradera, however you want to slice that. I'm going to quickly make sure I put that into the chat box as well. If you're going to get access to that, let me have a look at some of the questions here. Lucian is asking, are these calendar spreads? No, we don't do calendar spreads. We do simple vertical credit spreads is what we do. And in the member webinars, and I do twice monthly member webinars, every month, twice. We do those webinars twice live. We explain exactly how this works. You can either call 1-800-882-3040. It's in the chat box as well. Or you can even go to a chat room they have, If you want to talk to someone, metastock.com/sales chat. Or, of course, you can go ahead and order it yourself at metastock.com/steadytradera or steadytrader A, however you want to rate that. We have a chat room as well. So we have a Slack-based chat room that is open all the time. And on that chat room, we post ideas intraday or other stuff that comes up. So that's accessed there as well. It's on Slack, which means it's an app you can install on your phone. You can carry it with you. You can have it on your laptop, on your Mac, on your PC, wherever. That's included as well, a chat room. The next members webinar, we do them twice every single month, will be early December. So I think it's probably next week. You'll get an email on that. Let's see here. Also, another thing that you have access to, I'll quickly want to mention this as well, and this is all lifetime access. You also have access to what's called our cloud-based version of the Vertical X Pro. Okay, so the cloud-based version of the Vertical X Pro is a little tool that we built that's cloud-based, so there's nothing to install, where you can even build portfolios. Looking for these scans is specifically designed for this. So you can literally go in here, and you can it gives you new signals every single day of overbought and oversold stocks, ETFs, currencies, commodities, futures, whatever. You can create watch lists. It'll send you alerts, everything. So that's included as well, lifetime access to that as well. The next member webinar, early December. And again, the website for that is metastock.com/steadytrader A. Everyone's going to receive an onboarding phone call, a personal onboarding phone call. Okay, a personal onboarding phone call will be included to start off, and then we do the monthly member webinars. The monthly member webinars are always going to be recorded, so you'll never miss that. They will be sent out by email as well. So you can see, for example, the last one, it's on the website here. The last one we just did, I think it was last week. November. There was another one. There was another one in later in November, and then we're going to do one again. I think it's next week. So they will always be recorded, and you'll never miss them. Everything's going to be there for you. Let me see, Jeffrey. I don't know if you're here. I don't know if there's anything that you want to chime in on. If there's anything that I missed.
You missed my question on YouTube. So
sorry, man. You have a question for me. I see.
Yeah. So I noticed today as we were kind of going through, I did some scans. I'm going to kind of show them. But we didn't have any actual triggers today, but we had some setups, which might trigger soon. And I noticed a lot of them, all three of them, that are kind of showing potential setups over the next few bars are gaps. So the question really was like, when something gaps heavily in one direction or another, does that improve the quality of the signal? Is it something that you look at? Does it cause concern for you? And I noticed a lot of the examples you have included gaps. Roku was a good example of that. So is there anything that the gap tells you? Is that something that improves this? Go ahead.
It's a great question. No, it's a great question. And by the way, the gap really, it depends on what's the nature of the gap, right? What is the gap for? Was it on the bullish side? Was it an M&A deal? In which case, there's nothing to do. Just leave that alone. If the gap is to the downside, is it because the company is about to go out of business or there's a major lawsuit, in which case you don't want to touch that either. But if it's like, garden variety, up and down gaps, post earnings, or just sharp moves, you showed Roku, but even like Intel right now, like I showed you before, like Intel hasn't had a gap. It's just lasting higher because everyone's chasing, a few semiconductors into the end of the month. So, that one's overbought and that one's just as well. But gaps really depend on what's the nature of the gap. That's an important it's an important detail. What is the nature of the gap?
Okay, perfect. I think that's all of the questions. I am going to go in and show a little bit about how to run the scans and all that kind of stuff because it's very, very easy to do with Metastock.
Super
obviously,
simple.
Yeah. I love what's included.
I just clicked in the power console and then I ran the scan this morning and that's it. That's all I did.
Well, I want to say thank you for coming in and sharing some time with us. I'm going to show the scans real quick, of course.
Yeah, me too.
And the commentary and the experts. What I like about it, Serge, is how much is included because I love these I love this package because it's a one-time cost. It's very, very inexpensive, $397. But with that, you get the ongoing live coaching, the trading course, forever access to the indicator, the iron condors, like all of the stuff that's included for just like a one-time cost. It makes me wonder how you can do it.
Yeah, well, it's a good question. The reason I started doing this is because I think we have an almost an endemic problem with retail investors being almost addicted to short dated options, and the vast majority of them, 95+%, are either losing money already using the short dated options or will at some point. And so I just think it's a huge problem, and people are going to blow up their accounts more and more over time as a simple linear bull market comes to an end and has come to an end. And so, what I believe is teaching people that there is an alternative, right? Again, I'm not here to proclaim this is a holy grail. There are no holy grails. Everything still requires work, but it really is a big help. And it took us a year and a half to figure out what the right ingredients are to find these setups. So, if it takes JP Morgan investment bankers a year and a half to figure that out, there's a lot of stuff that we're tested. I guess is my point. And, I just, quite frankly, I enjoy showing people a different way, and for a lot of people, it's a bit of a wake up call that maybe the chart breakout chasing is not the only way to live. So.
I love the idea. It's such a unique strategy to I like it. So I appreciate you sharing it with us today, Serge.
Thank you, Jeffrey. It's great to be here. Thank you so much.
Cool.
And everyone have a great rest of your day. And listen to Jeffrey showing the scanning. It's really cool.
Yeah. Let me go ahead and take the screen here. And I'm just going to show you this real quick. I'll go ahead and make myself the presenter. And you should be able to see my screen in just a second here. So let me go ahead and do that. This is that Roku chart that we were talking about. And I just kind of wanted to narrow in. Let me actually kind of zero in on this particular chart, part of the chart. So I'll just kind of show you what the annotations mean for Metastock. This was back in, this was an example. We actually did a training session internally with our support reps and our sales guys today with Serge, and he did a really good job with that. But he's showing the Roku example. And so I thought this was a good example to show. Right here, you've got kind of a bit of a move up.
Jeff, you're not showing your screen.
Oh, are you sure?
I can see a big, beautiful picture of you, but not your screen.
I think that, let's see, can you see it now?
No, sir.
Okay, I think that might be a sizing issue on your side. That happens to me once in a while. Let me do this. Can you actually see it now?
Yes, now I can see a screen that says how to sell options for stocks with big potential. The white screen,
Right, this one? Okay.
Sorry, Jeff. I see a white screen that says how to sell options with stocks. Now I see your screen. Now you're flipping back and forth.
Okay.
Now I see the Metastock Surge's new add-on screen.
Okay, cool. $397, Stephen, is a one-time cost. So you pay for it, you own it, it's yours forever. It even comes with a 30-day money-back guarantee. So there you go. But okay, so here, if we're just talking about this, if you see the circles right here, if you look at the bar, you're going to see a little bit of a circle above it. And that just means that these are setting up. Now, you're not actually going to trigger into this trade until it doesn't show that. And so these are kind of what we call setup bars. Your trigger bar is actually right here where you see the bear confirmed daily. Okay. If I click on that, it does include commentary. And I love this about Metastock because it's going to say right here in the commentary what you should do with this. So the Roku Incorporated Ordinary just confirmed the recent Vertical X Pro indicators near-term overbought setup. Recommended action is to sell to open in options bear call spread. Okay. If we go back to the setup bars, and I'm just going to click on, you'll see right here, there's a triangle. It's basically saying the vertical pro indicator is currently showing Roku is near overbought. The signal will only be valid if the next bars candle no longer prints a dot. Additionally, either the first day or without a dot or one of the subsequent 3 days following must be a down day with a close of 1.5 to 3% lower than the previous day's closing. So it's telling you there's a setup. You can watch for this chart. It's not triggering yet, but here is what we're looking for, particularly to see that trigger. And within that 3 bars, we did get that trigger in, and it basically spells everything out for you. And I love that because it kind of just helps you understand what's going on. Okay. Now, finding the signals. One of the things that's really helpful with this particular simple system and method is it's something that you're looking for things to be extremely overbought or extremely oversold. And so if I come in here and I want to run an exploration, I want to find the patterns, I'm going to want to be able to scan for it. And you can scan for it here in Metastock very, very easily, and you can scan any market that you want. So to just show you that, I'm not going to run the scan today. I ran against all the optionables, all the ETFs. I'm just going to show you the report. But what I'll do is I'll come in here to the Power Console. I'll go ahead and click on the exploration here. And right here, you see there's 2 scans. Now, there's a bit of a spelling error in this that we've corrected in the version you'll get. Don't worry about that. But right here, you're going to be able to see all the setups if you run this exploration and all of the triggers. Now, what I did is I selected both of them. Okay, and if I wanted to show you the list that I ran, I can come down here and show it to you. But I ran all of the ETFs through this and all of the optionable stocks. So everything that's optionable in the US and anything that's an ETF is actually what got fed into this as an exploration. If you're interested in other markets and you want to run the exploration, you can run it against any market. With the data that we power this with, we get all the data through Reuters. So there's about 326,000 different instruments you could actually scan. And I scanned that whole market. It took a bit to kind of go through all of those stocks because we're talking about a scan list. I had actually scanned 10,000 instruments. So I'm just going to show you the report. If on the triggers, we actually had 100% reject rate today. There's no patterns that are actually triggering today. And that's fine. If there's not something that's a good actionable opportunity today, well, then let's go golfing or something, right? I want to really kind of focus on the other ones. So, but if I look at the setups, if I look for stocks that are actually setting up today, out of those thousands and thousands and thousands of stocks scanned, there was NetApp, PDS, Workday Holdings. And when I was looking at these earlier, this is what informed my question for Serge. A lot of these are stocks that are gapping. So you see right here, if we look at NetApp, right here, we've kind of gapped up really hard. And that's kind of why I was asking that question. We've got a setup here. What we're looking for is we're looking for kind of the exact thing that it says in here. So we're not gonna certainly do anything with this particular instrument today. It's just a setup. What we're looking for over the next few days is we're looking for it not to be overbought, oversold, and we're looking for it to have a down day of 1.5 to 3%. If that happens, that's going to kind of confirm the entry signal that Serge is looking for. So very, very, very easy to do. You're welcome, Mike. Thanks for the question. Let's see. Okay. The other thing that I really like with this, let me just kind of go back to the slideshows here, is everything that's actually included. And I love it. All the stuff that Serge is actually showing, the ongoing training that lasts, the 2 times a month sessions, all that kind of stuff is included. The options income secrets, the options X indicator, the ability to buy at one time and own it for any platform that you want. Give us a call, 800-882-3040, metastock.com/sales-chat, metastock.com/steadytrader-A. Any of those ways will be a good way to get a hold of that. Get in touch with us. If you don't have Metastock, you can, but maybe use one of the other platforms. Feel free to use it with the platform that you're comfortable with. But I think you're going to like the ability to scan and the depth of data, the expert commentary. And I'll actually throw in a free trial of Metastock with this purchase if you're interested in trying out Metastock and just want to have it on both platforms. And you will have it available for both platforms. One other thought while I'm thinking about it, if you're not familiar with Metastock, if you haven't heard of Metastock before, I'll just say this about it. Metastock's been rated the #1 product in its price category for 30 years in a row. And that's by the readers of Stocks and Commodities. And so if you haven't tried out Metastock before, but you like Vertical X Pro, go ahead and get it, $397. Take advantage of that free trial because it's a great software program. It allows you to do all kinds of stuff. And there's a reason it's been rated so highly. So $397 will give you a money back guarantee on that for 30 days. We're going to give you access to that options income secret trading course, the vertical X Pro indicator, the Iron Condors made simple, the twice a month class. Okay, 800-882-3040, metastock.com/sales-chat, metastock.com/steadytrader-A. And there you go. If you're watching this on YouTube, or if you're watching this on GoToWebinar, wherever you might be watching this, I hope you enjoyed the video today. If you're watching us on YouTube, make sure to like and subscribe. It helps a great deal. I want to say thank you to Serge for his time, for showing us the indicator, talking about an interesting strategy. I hope to see you at the next one. We'll see you again soon. Thanks, guys.
Hi, Kelly Clement here from Metastock. Before you go, I have two quick things for you. One, thanks for joining us today. We love having you here at our webinars and viewing our videos. So what I'd like to invite you to do before you go is like and subscribe. Like the video, subscribe to the channel. It helps us a great deal and it helps us bring you more awesome content like today's video. The second thing is we have a great ebook on trading that you can get for free. If you go to metastock.com/YouTube book, you can get a free copy of The Secrets of Successful Traders. It's a great book with lots of content from traders just like yourself who can teach you some of the secrets that they have learned. Thanks for taking a second with me and learning about those two things. Thanks for joining us and keep on trading.